Let's review the key vocabulary words for Unit 3.1 in IB Business. What is capital expenditure? Capital expenditure is money spent on big, long-term stuff like buildings or machines that the business will use for years. Is buying a company car an example of capital expenditure? Yep, a company car is capital expenditure because it's a long-term asset that helps the business operate over time. Is renovating an office considered capital expenditure? Yes. Renovating an office is capital expenditure since it improves a long-term asset and adds value to the business. What is revenue expenditure? Revenue expenditure is money spent on everyday stuff like wages, rent, or repairs that keep the business running. Is paying for office supplies revenue expenditure? Absolutely. Buying things like printer paper or pens counts as revenue expenditure, small, recurring costs to keep things moving. Is fixing a broken window revenue expenditure? Yes. Repairing a window is revenue expenditure because it's a short-term cost that doesn't add lasting value. Why is it important to separate capital and revenue expenditure? Separating capital and revenue expenditure helps businesses track what they're investing in versus what they're just maintaining, and it keeps the accountants sane. How do capital and revenue expenditures affect business profits? Capital expenditure doesn't hit profits right away. It's spread out over time, while revenue expenditure is counted immediately and lowers profit. Is buying new machinery a capital expenditure? Yes. New machinery is capital expenditure because it's a long-term investment that helps the business produce goods or services. Is paying staff wages a revenue expenditure? Totally. Wages are revenue expenditure because they're regular, short-term costs that don't create lasting assets, but keep the team happy. Can capital expenditure affect future business growth? For sure. Capital expenditure can boost growth by upgrading equipment, expanding facilities, or increasing production capacity. What happens if a business confuses capital and revenue expenditure? If capital and revenue expenditure get mixed up, the business could mess up its profits, taxes, and budgeting, a financial facepalm, basically.